90 days might be a short window, but it seems to us that you basically have two leaders who want to save face and both want to come out with a win for their own political purposes, and they're going to leave the details to the people that actually do these kind of negotiations. And it may take longer than 90 days, but at the end of the day, they're both probably going to claim a victory. And at the end of the day, a good negotiation means both sides probably lost a little.
Yeah. We got Ken Rogoff coming on later. I'm going to ask him about chess, about this Magnus Carlsen guy, because Rogoff was a grandmaster. But he's also talking about what's really scary are higher interest rates. And in his view, I think that he thought that maybe what the Fed is liable to do or does or doesn't do is at least or more important than the China talks. And when you think about it, all the debt that we have globally right now, a quarter or a half point really does increase costs to everyone involved, right?
Well, certainly. You know, within the tech space, you have some of the strongest balance sheets, so perhaps they're a little less levered to concerns about higher interest rates. But higher interest rates have been flavoring this entire discussion, whether it's stronger dollar issues with trade, whether it's weakening global economies, dollar-denominated debt overseas. The strength of U.S. rates really has put kind of a pall over everything in the market and created a lot of fear.
So tech would be more probably sensitive to China than interest rate, or is that it always? I guess it all seeps into, it goes back and forth, and you can't really talk about either in a vacuum, I guess, is your point.
Well, you can't talk about either in a vacuum, but certainly the call it the strong tech companies, the old tech companies, Microsoft, Intel, Apple, that have a ton of cash on their balance sheet, certainly don't need to go to public markets. It's those that are fueling themselves on cheap debt that are just going to actually find out that math still matters in the stock market. And if debt is less or is more expensive, it's going to be harder for them to grow their businesses.
So we were garden variety correction, then we were end of cycle bear market. Where are we now? What do you think?
Well, if you look at the broad-based nature of the rally last week and what we're seeing today is a little bit more of a risk on all boats are rising kind of market. So I don't think we could say this is a real change in what's been going on all year. You're seeing some of those highest flyers get the most bang for the buck in this recent negotiation. So hard to say that we're not just still in what was a correction in a bull market. We'd like to see a bit more rotation to value, right? When we talk about higher interest rates, we talk about companies that have stronger balance sheets. They deserve a little bit more credit maybe than some of the highest flyers.